Hello traders, it is November 1st, Thursday. We are in November, believe it or not. Amazing. The year has just flown by, or I'm getting old very quickly, or both. Thanks for joining me today for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Those of you who have been listening for a while probably can guess what I'm going to say next. We follow the same process every day. As traders, we have to be habitual. The power of habit. Very, very important to all of us as a trader and what we do, what we eat, our routine, just like athletes. Anyway, what is the market allocating to today? We have a mixed bag today. Yesterday, we left a gap behind in the S&Ps and NASDAQ and market had a pretty good risk appetite until the close and then dropped straight down to give us a touch of new lows right on the close. The S&P closed at the low, believe it or not. Kind of interesting. Quite a bit of selling into the close. I'm going to show you the relative volume, though. Pretty interesting move in relative volume on the close yesterday. So this morning, gold's the leader. Gold is up $16, 1.3%. Very, very interesting. The dollar taking a bit of a hit, trading at 96.28, down 0.66%. Crude had, I think I got an alert last night that crude was down more than 2% at some point. Crude is trading at $65, has gotten down into 64, what? 64, 65. So it's just 35 cents above that right now. Remember, crude went up into the 70s. Then the laggards today are the Eurobond, the U.S. bond, and the NASDAQ. The NASDAQ off a point and a half, really not that much. Very close to yesterday's open. Yesterday's close, I mean, it's teetering on unchanged. The Treasury notes are down a tick, and the cable and the euro are strongest today. It's really mixed up all around this morning. So the allocation today is really to both. The DAX is up, the S&P is up, the Dow's up, the Russell is up. So it's a mixed bag. We're trading inside of yesterday's range in the S&P. So the next question we have to answer is, what did we expect and what happened? Okay, I don't know why YouTube changed this to make it so small. It's set to the widest screen that I can have. I'm on a 4K, so if I decide to hit the full screen, this is what you'll see. It's not going to be very useful. So I'm sorry that this is kind of small, but there's not much I can do about it. So yesterday, what was our plan? The key plan yesterday is that we're likely to open an open auction right here. We're likely to attempt lower, but overall we're looking for pushes higher, right? So we're looking for to push into 27.27, stall out at 27.27 most likely. The MC point of control is right there, and if we got any extension up above, the target would have been 27.51. It ended up turning at our stock zone, which is listed here, at 36.75. Basically marked the high, and the next stock zone down, or the stock zone that's down that marked the bottom, was 27.05, 27.06. Here's what actually happened yesterday. Let's look at the trigger chart. Isn't it nice that on a 4-tick Renko chart, the entire day fits into one screen? We haven't had that in a couple of weeks. Not a fan of that. The trade has slowed down quite a bit. But what we see yesterday is a very clear open auction with a very clear opening swing. We saw sellers step in. We saw sellers step in at 27.14.75. We saw buyers step in at 27.06.25. That was a stock zone, still is. And then we see this burst through the opening swing high. So now we know that there's a high probability that this gap zone, oh, my stock zone's just updated. High probability that this gap zone is likely to stay open. Remember, the probability is, I think, if I recall correctly, somewhere around 81%. 81% historically. That if we don't start filling a gap zone after the IB's built, which is the first hour, then there's an 81% probability or so that the gap zone, and the definition of a gap zone is where we open and yesterday's high. That's the gap zone. And then once the day is done, it's the low to yesterday's high becomes the gap zone. So this marks the gap zone, this gray band. So there's an 81% probability, 81% probability going back to this date. So over 3 years, so about 840 sessions. There's an 81% historical probability that we don't fill the gap zone. In other words, touch the prior day's session high if we don't do so in the first hour. So what are we doing? Knowing this, we trade from the long side. It doesn't matter anyway. We're going to trade from the long side because scenario 1 says so. And then we pushed into the 36.75 stock zone. We got to 37.25, exceeded by 2 ticks, still in the band. That's also 61%, the 61% retracement of the 17th to 29th swing. So a little bit of confluence there. The band is not built on that retracement. The retracement is just something I layer on just because so many people watch fibs. But the stock zone is built on volume profiling or price action or statistics. And so we turn over and then we start to sell off. When we sell off, really the delta is really getting pushed here. I want to show you this on relative volume. So this is my relative volume chart from yesterday. The entire session. So this is the ES pricing right here on a 4-tick Renko as well. Same as my trigger chart. The orange line is the small caps. By the way, this data is very, very accurate. It is consolidated data using the tick ID from the CME. So this basically assembles the trades back to what the order size is rather than the fill size. The orange line represents 5 lots or less. So we call those small lots. And the white line is 6 lots and greater. And we consider those the larger lots, okay? And then the yellow is the very large lots, which are greater than 200. That number actually should be adjusted down. And we're looking at big orders there. Remember, we're reassembling the trades on the tape. We're reassembling the trades on the tape. So this is not going to match your broker feed because broker feeds do not do that. The only one that does that I know of is IQ Feed, which is what I use. So you could see very large lots as we went sideways here. Very little participation, slightly up, slightly down, and so on. Very little participation in this whole. We can tell during the trade that it was very, very slow. The small lots were buyers yesterday from the open. The large lots were buyers as well. So I was pretty aggressive on the long side as expected on scenario 1. And then large lots started selling and just continued to sell. I mean, once we reached this peak at 37.25, large lots really started to hit the bid. We could see the bid getting hit and getting absorbed on the way down, and price was just following. And the S&P ended up putting in a neutral day by a couple of ticks, just 2 ticks. It put in a neutral day, quite amazing. Neutral day down technically a neutral extreme. It closed on the low tick yesterday, but it only got outside of the initial balance by just 2 ticks. So very tricky to read. My expectation overnight is we're likely to drift through 2,700, and that didn't happen. So a little puzzling this morning. But as we sold off, you can see that the selling accelerated right into the cash close. The last minute of trading, you could see the selling accelerated quite a bit by the large lots, but the very large lots were the ones taking those fills. Very large lots suddenly spike up and take off. They take the very large lots took 14,000 contracts in large lot trades on the close. This can be a hedge. This can be whatever, but I found that pretty odd. The small lots just traded sideways. So I find that it's important to watch this. And yes, there is software out there that does a reconstructed tape and so on, but that's not using the tick ID from the CME. It's using an approximation. It's probably accurate. I don't use those tools, but I'm sure they're relatively accurate. But what I'm getting at here is what you see on your relative delta chart, if you're using this definition, is not likely to be mine, and that's the reason. Okay? So that's that. Not trying to start a pissing match or anything. So what have we done overall? We've gapped up and we tested higher. A little bit of a weak high, but what we did is we pushed up and we finished at the low on a gap up scenario 5. So it's very interesting. We do have a pullback, so we're now starting to consider what does this profile look like from the peak? What does this last swing look like? And it's very, very noisy. I still look for 2750 to be a key target area above the overnight session. Here's what we've done. Note that the volume has dropped off a fair amount. It's trading about 2 times the expected mode or the expected volume in the overnight session. It's not 3 or 4 or 6 times as some days have shown. The profile overnight shows that overall we're slightly bullish. We have the point of control. We have the point of control right at current prices. We have the mid below us. We have the VWAP currently below us. We've tested below yesterday's low, but quickly rejected up. Hard to glean anything. Hard to glean anything from yesterday's profile other than the fact that the market is skewed to the upside. I mean, higher highs, higher lows on these swings. So it really kind of messes up my expectations for today, but then that's trading for you. All right. So what do we have for today? Well, what am I looking for? Overall, just looking for the primary scenario, given what we saw into the close yesterday. Open auction in range. Again, open auction because that's what we've had for a while. Push up into 27.27. Consolidate, fight, attempt higher. I'm looking for an impulse down at some point. I'm looking for the close to be tested at 27.0575. And then I'm looking for this to start walking itself to 2700, 26.95, and potentially into the gap zone close. The gap mid of the session of the gap mid from yesterday's 26.97. So that becomes a key measuring stick once we get through there. Does it hold 26.97? Does it break through? If it holds 26.97 and bounces back up, then I'm looking for it to close in yesterday's range. But overall, my bias today is that it's likely to attempt higher early, fail, roll over. Barring that, if we push through 27.27 and hold the bid higher, I'm looking for an open auction that moves lower, impulses up. If it holds at 27.27, then I'm looking for that 37 to break. And then yet again, I'm looking for the push to 27.51. There's plenty of fuel for this to squeeze higher. There are a lot of shorts on. A lot of folks are trading the pullback and so on to 62% and so on. So this could very quickly get to that 27.51. The end of October is generally bullish. Going into November, December, given current context, looks bullish. The seasonality or traditionally or historically. But I can only trade today. So don't conflate the historical probabilities with, coloring what you're thinking, because those people putting out those stats, those people discussing those seasonalities on CNBC or Twitter or whatever, are probably not looking at your time frame. So remember, whenever you're looking at someone else's homework, stat, bias, the first question that should pop into your mind as an experienced seasoned trader is, that's right, time frame. What is your time frame? I can be long, heavy. You could be short, your full account. We both may be wrong. We both may be right, because I'm long for the next 15 minutes. You're short for the next 3 days. So my long is your pullback. My profit is your pullback. Your loss is my trade temporarily. So time frame is really important when you're looking around to help guide things or color your opinion, which I suggest you don't do. But here you are listening to me. Just remember to always ask, what is the time frame of this person? What do they trade? That should be pretty obvious to you. For me, I'm a day trader. I'm looking for relatively small fluctuations in price, and I'm looking to profit from those by exerting leverage, which is not suitable for all investors, but I exert leverage on small bites rather than trading a swing with an option covering the position and something more sophisticated than that. So I trade in the smaller fluctuations, what people call noise. That's where I'm at. So just remember, this is what has to frame your idea of what I'm talking about. Convergent traders, remember today we kick off our program for November, which is the Trader Mindset November. We start talking about taking the loss. That'll be at noon Central, 1 Eastern. It will be recorded. It'll be available to you in the recent webinars like everything else. We're going to spend the whole month of November talking about your mind, your psychology, attitude, mindset, and so on. That kicks off today. I'll catch you there this afternoon. Good luck, everyone. Take care.